This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Friday, May 1st, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you got any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets here to make corn up a half at 465.25. May soybeans are up 2 at 11.84, and May Chicago wheat was down a quarter at 623.5. This morning we had an export sales announcement: 148,240 metric tons of corn to unknown destinations. That was split up 78,240 metric tons for 25 and 70,000 for 26. Good morning, guys. Looks like we had a nice planting window coming up here, in the 5 to 10 day outlook for a majority of the upper Midwest, which will be good. And guys should be rocking and rolling pretty good. We got a couple weeks looking out forward for President Trump and President Xi to potentially meet. So that's on the forefront of everybody's mind. Crude overnight down a couple of bucks here. So Dustin, maybe share a few thoughts here as we wrap up the week, and then we'll throw around the room.
Yeah, thanks, Dan. Yeah, it's hard to know what to expect going into the weekends here. It's, we got good prices, and $5 is a psychological level, I think, for corn. We wonder what happens if we do break that. There's a bit of a run there. We saw that, I think, a bit in, wheat. I think we saw that a bit in energies. We kind of broke through some of these glass ceilings, and then, we found more buying through there. So just kind of keeping that in mind. If all of a sudden, by chance we get that test and it jumps above $5 by a good amount, I'd probably be laying into that myself. Laying into it meaning like using it as an opportunity to build hedging. And yeah, I wish I had more to say. We don't sound like a broken record because, we're talking about in our letter, we do have pretty good sales pace. We got really good ethanol demand domestically. We got good export demand. And, the feed number, that being up 700 million bushels from last year, I think that's the big question. We had a pretty good stocks report that didn't suggest that we were way under pacing the feed demand estimate. If you just kind of back into those numbers, the feed one is always the kind of the fudge factor you have to estimate through stocks. And it wasn't terribly bearish on the March 30th report. And we'll know more once we get to the June 30th report about that as well too. I will point out the stocks jumped dramatically last year at the very end of the year, and we think we kind of chalked that up to less feeding than we anticipated. I don't really predict myself that we're going to see a 700 million bushel feed increase year over year. It might be 300 to 400 million, and that's where I think we have a pretty good net of supply to be above 2 billion bushels in the end. That's just my personal opinion. And that's the one thing holding me back from being more supportive on corn. So otherwise, corn's got a pretty good story, I think. It's just that if we have enough supply to satisfy some of next year's demand carried into next year, that just kind of puts a little bit of a lid on the market, in my opinion, of where things can go with that supply excess on hand.
Very good. Ben, what's on your mind as we wrap up the week?
I agree with Dustin. I think that corn's presented some good opportunities. All the things that we talk about that are uncertain are factored into the market. I think it's going to take further weather issue, a prolonged situation in the Strait of Hormuz, and continued demand for us to keep ratcheting higher. I was talking yesterday to a client, and I said, there's a lot of room in old crop still to just correct in spreads that you could easily see July D's move out to 40. So I think you got to you really got to not be in a position where you're straddling too much risk on both crops. To me, and in my experience, that's where people get hurt the worst. So I think you have to pick your poison, and you have quite a bit of support still on new crop with insurance, farm bill, ECO, etc. So just kind of ambivalent this morning. The obvious is taking out the highs that we had 2 days ago and getting some people to get a little panicky. We are coming off a reversal the previous day, so bull markets can eat those reversals up and make the classic bar chart traders kind of a roadkill. So just watching. I think wheat's a little bit interesting. When you look at July set, it's back out. The spreads are getting back out to a place where you could possibly have VSR trigger again. So we'll see. Just I think you get to get a day at a time right now. Make sure you're comfortable with what you look like down at 440, 435 before your insurance kicks in, and let the market do what it's going to do.
Very good. Any other thoughts, parting wisdom as we head into the weekend here, fellas? I know we've talked a lot about a lot of things here this week, trying to carve out new stuff. Justin, what are your thoughts?
No, I mean, we had a flat price rally. Obviously the spreads are widening as that's happening. We're getting deliveries, corn, beans, wheat, oil, getting deliveries. So there's, it's probably run up past the fair value for now and the nearby. So to Ben's point, I mean, I think the spreads will continue to widen if flat price continues to go higher, because you're getting into good price points, and there's plenty of old crop supplies that still have to move. And we've talked about, the potential bullishness is out forward if it is. So I think that's going to be a trend that continues. And I think, kind of to Dustin and Ben's points, like, don't want to lose fact of the price that we are at. There's a reason we're up here, but it's a much better situation than we were looking at 6 months ago for sure. And it's one of the best situations we've been in on this date. Now obviously costs are higher and all those kinds of things. So just remember that, farmers are going to plant, and whatever you paid to grow corn, for example, is what you paid. The market doesn't care at some point that you paid that for corn, right? So once we get it planted and we have a supply, it doesn't have to stay at some price to make sure that you make money. So if we have, crops start looking good and we start to break, just trying to keep that in mind too.
Yeah, very good. Dustin is a little teaser. I think next week we'll be out with a video discussing some crop insurance stuff. Is that that's on tap for us?
Yeah, I think there's a lot of questions around MCO and how these higher input costs have changed that product. We talked a lot about that last September, and we're just going to go through some of the software things we've done to show that, and then what we actually saw for input cost changes through April. So
cool. That'll be good. That'll be premium content we put out there next week. So everybody stay tuned for that. Let's move quickly here, Ryland, over to livestock. We'll wrap up the week there. Cattle cooled off after a $12 rally recently, and then we're kind of going nowhere fast in hogs. So give us your thoughts.
Right. Well, just like the other markets, some really good opportunities here. No question about it. We're hitting record highs in cash, seeing these huge moves in the cash market. And I mean, I think the idea is now, looking down the road, demand is only going to improve as we get into the summertime. Prices are going to stay supported. I mean, just from a risk management standpoint, I think you want to keep that in the back of your mind, that things don't always happen the way we envision it, even, in times like these. So it's been a really good opportunity, I think, for everybody to kind of look at margins in the back end, or at least from a coverage standpoint. Obviously, profitability down the road, especially even a year out, is not really that high, especially with the price of feeders being what they are. But there is still good reason, I think, for guys to look at some kind of protection here. As they say, it's always the most bullish at the top, and I'm not by any stretch calling for a top right now, but I mean, that seems to be a lot of the mentality when you see a $14 rally in cash, in such a short period of time. It's hard not to feel pretty strongly about where things need to go from here. So overall, I mean, the news is really good. You had higher beef markets overnight. We're up $1.47 in choice, of $1.92 in select. So it's a new month. I think everybody should just be kind of looking down the road and looking at margins and seeing what they can do to just kind of protect themselves at this stage in the game. And on the hog side of things, absolutely going nowhere. We took off everything that we put on the day before. Open interest down 3,100 contracts. So we definitely saw some liquidation just before the end of the month and really just need to see some prolonged support here in cash and carcass, I think, in order to get the market kind of excited. Cash was down 61 yesterday at 92.64 and carcass down 43. So overall, just seems like it's kind of stuck in the mud for now. Seasonally, things should get better from here, but we will see. Weekly exports really strong last week, 46,300 metric tons. So I think just from a price standpoint, we're obviously running into some demand down here. So I think that's something to be cognizant of. I think anybody that's pretty well sold at this point may even want to look for some upside, just because it feels like it's a little bit overdone here, but we'll see. That's all I got for today here.
Very good. Appreciate it. We made it, guys. We've got a special guest here today. Brian is out. We wish him well, but Jack is going to handle Fun Fact Friday, so buckle up. You never know what you're going to get here.
You Dan. Today's Fun Fact Friday is about royalty. Battle of two kings for one throne. And it all takes place in the small town of Mattoon, Illinois. The year is 1952, and George and Betty Hoots, local business husband and wife team, have just purchased an ice cream shop called the Frigid Queen. Over the next 5 years, Gene expands on the business immensely. A two-car parking garage. It's a little loud. I'll tone that down. A two-car parking garage, a grill, a dining counter, and most importantly, he starts serving French fries and burgers. With all these new upgrades and whatnot, Gene and Betty decide it's time for a new name. Now, I can't corroborate all this story, but I do know that Gene wanted to call the restaurant the Hot Dames. So I assume he wanted to have all the pretty girls of Mattoon, Illinois served behind the counter. But Betty shot down this idea. And she said to him one day in 1959 that the Frigid Queen would need a king. And on that day in 1959, they landed on the name Burger King. Now, you might be wondering if this is an advertisement for the Whopper-slinging fast food Goliath that we all know as Burger King. And let me tell you, it's not. It's actually the opposite. That Burger King, founded in 1953 in Jacksonville, Florida, may have been around before the big burger pivot in Mattoon, Illinois, but they were still doing business as Insta Burger King and wouldn't pivot to or restructure to become the Burger King Corporation until the year, you guessed it, 1959. So on the horizon, we have an inevitable burger battle. You know, who's going to be on top of this throne, right? And first blood hits in 1961 when the Burger King Corporation, obviously hell-bent on nationwide expansion, opens their first franchise in Skokie, Illinois in 1961. By 1967, Gene and Betty are flanked on all fronts. They got 50 locations in the state of Illinois. You know, with an invading false king on the horizon, they decide it's time for legal action, right? And they sue for the rights to the name Burger King. What ensues is a federal suit that has maybe the funniest name I've ever seen. I had to write it down. Burger King of Florida Incorporated versus Hoots. That's just great. Anyway, so you would think that a mom and pop shop going up against a national conglomerate would have an uphill battle. But luckily, Gene and Betty had an ace up their sleeves. You see, back in 1959, Gene's business-savvy uncle recommended that he get an Illinois trademark on the name Burger King, effectively making them completely bulletproof in the state of Illinois for a naming rights battle, right? In the end, the federal courts decided that the Burger King Corporation could not or does not have the right to operate within a 20-mile radius of Mattoon, Illinois. Now, this case went on to I think it's the Seventh Circuit Court of Appeals, and to this day, this ruling is like a vital pillar to the Trademark Act of 1946. So, long story short, at BK, you can have it your way, but not in the town of Mattoon, Illinois. God save the real, true Burger King. The end.
Long live the king.
Nice.
Great work, Jack. And fun fact, I've eaten there.
Really? Is it good?
Yeah, meetings down there. It's a burger joint. It's like it's a burger joint, dude.
Well, the music makes it sound like really nice and fancy. So
it was good.
I thought it was a haunted story.
Yeah, ominous.
Yeah. You'll find a body somewhere or something. Very good, Jack. Appreciate it, buddy. Just came into the open. We got May corn up a half here, 465 1/4. May soybeans are up 3/4, unchanged now at 1182, and May Chicago wheat is up 2 3/4 at 626 1/2. We talked a little bit, Dustin and I, about some premium content here coming out next week. Check out the War Room Report. The link is in the description. We'll periodically be doing these updates. Also, you get a daily briefing of the things we're talking about on a deeper dive here in the War Room. So check that out. Also, a portion of those subscription fees goes to support the AgYield NextGen Foundation, which supports the next generation of leaders here in ag. Check us out also, that NextGen Foundation first annual golf classic, July 27th at Aurora Country Club. The link is also in the description there. You can meet and mingle with everybody here on the War Room Report. Also, meet the scholarship winners from the first annual competition. So it's going to be a fun day. Check that out. If you got any questions, let us know. We can get you registered there. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. We're doing this every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great weekend, and we'll talk to you again next week.
The War Room is presented by AgYield, a risk management partner of American grain farmers for over 50 years. Looking for more in-depth analysis? Check out the War Room Report. Our team's knowledge and expertise delivered straight to your inbox every weekday. Each report delivers key market-moving headlines, critical weather updates, USDA report breakdowns, and exclusive video content. All for $50 a month. And most importantly, 10% of every subscription will go directly to support the AgYield NextGen Foundation, a nonprofit investing in agricultural education and the future of farming. To sign up for the War Room Report, check out the link in the description or learn more at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.